Good afternoon, everyone. Welcome to our Get Property Wise Wednesday chat. We're so happy to be here with you all. And hopefully we're going to have a very good experience today because we've got a special guest with us. But before I get into that, ladies and gentlemen, please do, I see there's still some more people joining us. That's great. Just to tell you a little bit more about our Get Property Wise chat. So as you know, Leroy and I started these sessions a few weeks ago. And what a start we had, but I can tell you we're definitely more clued up in terms of the technology. And we've got ourselves sorted there. So it's good to be online. Also, so the reason why we really started these chats is obviously just to help you, the seller, the investor, just to become more property wise in terms of, where you may find yourself in your property journey. We will be having great interviews every week. We're going to be sharing some awesome insights, as you have already heard. But over and above that, we really want to add value to our subscriber base as well as you, our followers. So we're going to be doing this on a regular basis. And then for those of you who don't know who Property Pick is, so just to tell you that we are an online investment property platform. We started this business a couple of years ago, really with three main objectives in mind. And the one objective was to create a platform whereby sellers who need to sell their properties quickly, for whatever reason, have another platform where they're able to do that quickly and directly to investors. So whether you are, finding yourself in a situation where you need to immigrate or relocate, or you've maybe have an inheritance and you don't want to keep that property, or maybe you're in a bit of a financial situation and you need to sell quickly, Property Pick is the platform to assist you. And then at the same time, we also want to obviously create a platform for investors. So being investors ourselves, when we started our journey a couple of years ago, we realized that there are two main challenges that investors face, and that is finding good property deals as well as a good power team to connect with. So it was as a result of the frustrations that we went through that we decided, okay, we wanted to put a platform together whereby we are able to help ourselves as well as other investors tap into good investment type properties and of course be introduced to a power team. So being introduced to a good solid power team is one of our main objectives as part of our platform, and hence one of the reasons why we have Natasha Champion from Uber with us, to make sure that we really bring you some good quality power team members that you can engage with going forward. But yeah, that's I think that's enough about Property Pick. So just to get into my panelists with me here today. So as I said, we've got Leroy Slava, who's my business partner and co-host, as well as Natasha Champion, who's the business development manager at Uber. So just a shout out to everyone from your side, Natasha and Leroy.
Okay, good morning, ladies and gentlemen. How's everyone doing? You well? You happy? You smiling? Awesome. I think Candace, before we get to Natasha to do introduction, let's see who we have online here. Okay, hi, we've got Nico. How are you, Nico? Alicia, welcome. Mr. Banoko, Kelly, Ricardo, Neil, guys, welcome. What we want you to do is we want you to like the page, share. We'll be asking Natasha a few questions, but if you have questions, feel free, put it in the comment section, and I think we'll get to the questions the last 5-10 minutes of the interview. Right? So guys, feel free, share the Facebook Live and comment. So Natasha, thank you for joining us. We appreciate it. So I think let's just hand over to you. Maybe just give us an introduction of who you are, your role at Uber, and what Uber does.
Thanks Leroy. Thanks Candace, to both of you for having me today. I look forward to adding value to all the listeners/viewers. It's nice to see people, even if it is online. So lovely to be able to connect. Uber Home Loans pioneered home loan origination in South Africa back in 1999. We launched as mortgagesa.com. Those are old enough to remember the late 90s. Everything was a .com. We rebranded to Uber in 2004, and just recently we've given ourselves a surname so as not to be confused with the taxi service. So
Okay.
it's Uber, OOBA, Uber Home Loans. So what is it that we do? At Uber, we like to be known as really adding value by empowering people to own their own homes. We're passionate about home ownership. We're passionate about every South African, the dream to make their path towards home ownership, and many people require finance in order to do so. So what we do is, as a home loan originator, is submit one application to various banks to increase chances of approval and indeed the best deal for the client at the end of the day. Our service is 100% free of charge to the purchaser. That's a question we get asked often. And I myself have been with Uber for 17 years. I head up business development in the north of Gauteng. So myself and Candice come to you from the Gauteng Aleng department. I think you're joining us from the mountain.
No. I'm in Boksburg, eh? I'm in Joburg.
Okay, all right. So we all in Gauteng, but I think our listeners are spread far and wide.
For sure.
Okay, thanks for that, Natasha. I think Natasha, there's a few questions that we want to cover. We've got a half an hour together, so I think we might as well get into it. A few questions that we've got for you, and especially with this time during the COVID time, right? What are your views on the property market during this COVID? Because we've been in lockdown for how many days? 54 days plus minus, I think. And yeah, about 54 days. It hasn't been easy. And what are your views on the property market during this time? And what do you expect it to be like after after we get out of lockdown, when we get to level 2, level 1 and out of lockdown?
So yeah, I think as a frame of reference, we came back off the back of March before lockdown was announced on the 26th, having one of our best months in quite a long time. So I think we had gone a far way to going in the right direction. Lockdown obviously announced at the end of March, and we saw the immediate impact on our intake in the month of April. So we measure intake, and in the month of April, the average reduction in intake volumes was about 66%. So on the back of that, I think we've seen a little bit of lights at the end of the tunnel as it comes to May. So currently, we're on the 25th of May, the 20th rather. We are seeing our intake at a level of between 50 and 60%. So a 40% reduction. So that's already increasing. Estate agents are obviously managing to do deals online. When we talk about intake, it means an offer to purchase that we place into a home loan application. So in terms of a frame of reference, we're already seeing an increase in volumes as it relates to intake. So certainly we're positive about a recovery. I think it was Adrian Gore who said it's sentiment that drives the fundamentals and not the other way around. So we have to be cognizant of the fact that there are people experiencing reduced income and experiencing kind of, in some sectors, a no work, no pay. So affordability will certainly be called into question and have an impact. Having said that, I think there are a lot of opportunities to come up. Certainly the buyer's market will prevail. The purchase prices will come down, creating opportunity for investors and certainly first-time buyers. The interest rates are at their lowest that they've been since the 70s. And there are people whispering about another 100 basis points reduction tomorrow when the Monetary Policy Committee meets. So we're hoping for a prime interest rate of 6.75, and that's certainly unprecedented. And that's help with people entering the market and certainly investors that are gearing their investments.
Awesome. Natasha, so that's very interesting. So just a few things that I just want to highlight from what you've said now is that you've already seen that there's been an increase in terms of your intake. So that means that people are starting to buy properties online again. So even though they've been in this lockdown situation, they are still going online, analyzing deals and buying property.
Correct. And we can see it in the figures. We run very, very tight in terms of our stats and our tracking, you know, so we can make these statements based on fact and an example of what we're seeing in the market in a tangible way.
That's awesome. That's really good. Another thing that you also just mentioned now is just with regards to the, I mean, we aren't anticipating another repo rate drop, as you say. But what I want to ask you is, this will now be the third drop that we've obviously had in such a short period of time. And in your view, do you anticipate that you know, this situation will stabilize in terms of the drops that we've seen over the last couple of weeks, or do you anticipate that you know, maybe after lockdown we might start seeing, you know, some of the rates increasing, or do you think it will be the trend probably for quite a while? What are your views on that?
So I'm going to start my answer with a disclaimer. I'm neither an economist nor do I have a crystal ball, but I think to speak for Uber, and certainly to quote our CEO in a recent webinar that he hosted, Mr. Reese Dyer, we believe that the interest rates at a lower level will probably be prevalent for the next 2 to 3 years. You know, we can't see inflation, you know, rising to a point where interest rates also go back up. So I think that the reduced interest rates kind of at the levels that we currently are, maybe expecting one or two more drops before the end of the year, will probably be around for the next 2 or 3 years. We hope.
That's awesome. Yeah, so that's really good for us to anticipate. Some of the questions that we've received in the past with regards to the drop in interest rates, and maybe you know, we'd like to hear your view on that, is that you know, current property investors have asked us, is this then potentially a good time for them to fix their interest rates with their banks, seeing that we've been seeing some good drops, and we obviously know that the situation won't last forever. So do you think it's a good time for them to start looking at those type of situations, or do you think that they should still give it some more time and see if we experience further drops? What is your view on that?
You know, in the investor arena, it's always very much based on the numbers and the calculations, the ROIs. So that's usually quite a tight budget that they operate under, certainly if they're looking to grow their portfolio. So we need to bear in mind when it comes to a fixed interest rate. Number one, it will most likely be fixed at prime plus. So they'll never fix it at a concession. So if the client's currently got a very favorable interest rate concession, he's going to not only lose that concession, he's probably going to add to it. So say he's experiencing prime less 1% on a property. If he fixes, it'll probably be prime plus 1%. So knowing that they are going to increase a fixed interest rate, and knowing that the term is also not open-ended. So a fixed interest rate term, the longest you can fix for is probably going to be 3 years maximum.
That's good information.
So they have to approach their bank, get quotations based on various terms and based on various scenarios, and make an informed decision from there. Fixed interest rates could be favorable for people with very tight budgets that can assist with kind of planning and working out their ROIs. The terms will be limited and the rates will be prime plus.
Awesome. So I think, I think you've also just touched on a point here, and whilst we're still on the interest rate topic, is last week we had a session around, you know, how people are able to save their homes after COVID-19. So I think you've actually just responded in a positive way there. So for those of you who are on tight budgets at the moment, as Natasha just said, that obviously there is an opportunity for you to see if that is an option. Obviously, once you've done numbers and, you know, we see some further drops maybe taking place, that there is then an opportunity for you to try and, you know, fix those rates maybe for the next 3 years, as she said. So I think it's good to know that that option is there. So for those of you who are on tight budgets, I think it is definitely a conversation then to have with your banks and to see if there is an opportunity, you know, just to assist yourself during these difficult times. So thanks so much for that. Leroy, I don't know if you've got anything else that you'd like to ask around interest rates before we move on.
No, I want to ask Natasha. Natasha, with which banks do Uber mainly work? And seeing that that Property Pick is an investment portal and we deal mainly with investors, which banks work better for investors? And what's the bank's appetites now? Which banks, how are their appetites? Are they giving 100% bonds? Are they giving 90%? What's the bank's appetites right now?
Okay, so I'll start with your first question. Uber deals with up to 9 lenders. So we deal with the big 4, the ABSA, Standard, Nedbank, and FNB that we all know. We deal with HIP financing and Itala in the affordable space. We also work with private banks, Investec and Rand Merchant Bank. And we've got an alternative finance partner, Sentinel Home Loans, and they are looking at an installment sale property finance solution. So we covered really across the basis. When it comes to investor-friendly banks, I don't think that there's one bank that's more investor-friendly than another. Having said that, ABSA is the only bank currently spearheading a specific buy-to-let product, where if it's the client's 3rd property, so primary residence, 1 investment property, 3rd property, they will take into account a large portion of a projected rental, which the other banks currently aren't as keen to do.
Okay, that's good. And the bank's appetites, what are they?
So none of the banks have made material changes to their products and their product offerings. There is one bank that's tightened up slightly, but we haven't had a mass surgence of banks cutting 100% loan to value and indeed bond plus cost products. As I said, there's only one bank that's tightened their screws slightly, but as an overview, the banks are still very much interested in lending where the numbers work. It is their job to lend money first and foremost. Home loans are one of their most successful products and certainly most income generating products. So if there's a deal to be made, the banks are very much still keen on doing business.
Okay, that's good news. Right, so investors can still analyze deals, still send through applications. The banks are open to lending.
Absolutely. You know, we encourage a home buyer, regardless of whether they're first-time home buyer or an investor, to engage with a mortgage originator upfront, to run the numbers and to have a look at things with the bank's eyes.
Okay, no, that's good news. That's good news.
Very good news.
Natasha, guys, if you got any questions for Natasha, Peter, how are you? Analda, good to see you. Alicia, any questions on banks, home loans? Pop it in the comment section and we'll cover it. Hi, Virgil. Okay, good stuff. No comments right now.
Okay, I'm just having a look here on my side as well. So yes, everyone, so just remember now's the time. So if you've got any questions with regards to what we've just discussed now, please do ask those questions. I think whilst we're just waiting for everyone to put their questions together, maybe just to, just explain to you in terms of, we've now discovered that, people are obviously still buying properties, which is a positive thing. And I'm sure some people were in the middle of deals and obviously they wanted to work through that process. I know some of the coaching students that I've worked with were in the middle of deals, so they obviously wanted to get some of those deals finalized. So yeah, we're glad the deeds office also opened not so long ago, so some people have actually been able to move the deals forward. But I think for those of you who obviously would still like to get started in property, remember we are seeing the best interest rates that we've seen in a very long time. When was the last time, Natasha, that we saw such good interest rates? I believe it was it in the early 1990s? Yeah,
so we haven't seen a rate, and now you've put me on the spot. I've usually got my little table in front of me. I stand corrected, but if I remember correctly, we haven't seen 7.5 since or below since about 1973.
Sure.
Wow.
So it has been a really, really long time since we've seen interest rates like this.
Wow, that's amazing. It's amazing. Yeah, that's a very long time. So, and I mean, I've heard people say that it's, you know, it's definitely a good time if you are in a position, if you've got access to capital, if you've got the affordability and you are able to tap into, you know, home loans and finance. Now is definitely a good time to buy property. So of course, remember we said it's important to analyze your deals, make sure it works for your strategy. But definitely, I mean, since the 70s and we're seeing, and we're still anticipating further drops. So property investors out there, we are really in a very opportune time, and now's the time to start looking at those opportunities. And I think for those of you who would obviously like to make use of Ooba's services, so please connect with us on info@propertypick.co.za, and we would be able to direct you or connect you directly to Natasha's team. So please do connect with us if you are looking for, and mind you, I must just say that your bond originator, okay, is really able to get better rates for you if compared to you having to go out yourself. We've heard this from many investors. It's not just myself and Leroy that share that sentiment, but I promise you, and Ooba really being, we believe that they're the best in their industry from a bond origination perspective. So we really believe that you would be in good hands. So now's the time to take advantage of the opportunity. So if you're looking to connect with Ooba, once again, connect with us on info@propertypick.co.za. And of course, for those of you who are looking for good investment type deals, go onto the platform. Now's not the time to sit around. Now's not the time to be negative. Now is the time to be positive, look for opportunities, and start planning and preparing for your financial success. So go onto the line, subscribe to the platform. Either as a seller or as an investor, if you need to sell quickly or you're looking for good deals, go onto the platform, subscribe, and you'd be able to tap into those opportunities. Once you're part of that subscription base as well, there is also another list that we, in addition to the deals that are available, we provide you with a list of over 100 properties. For those of you who are looking at commercial type deals, who are looking to do developments in the future. So that list contains a lot of opportunities within the development space there. So yes, now's maybe not the time to, you know, you're not in a position to actually start pursuing those opportunities, but now's a good time to get the properties at great prices so that we can obviously start planning for the future. So yeah, so that's Property Pick, ladies and gentlemen. I'm just trying to see if we've got further questions. Leroy, are there any questions on your side?
Natasha, you mentioned, I think a lot of people know that you mentioned 9 banks. And I think most people know the big 4 banks with SA Home Loans, the 5, but you mentioned Itala, Sentinel, and HIP, which I think most of our listeners do not know who they are and what they finance. So maybe it's just a short, just to tell us what they are, and the HIP, Itala, and what's the other one I mentioned now?
Sentinel.
Sentinel.
So Itala focuses mostly on rural areas in the Eastern Cape and KZN. HIP Finance is specifically for the affordable housing arena. They've got quite some specific qualifying criteria in terms of income and purchase prices. So I'd say probably around the 600 and below, and income not in joint income not in excess of 20,000 Rand a month. When it comes to Sentinel Home Loans, they've just found an alternative way, and I encourage the listeners and the viewers to have a look on their website for further info. But they encourage an alternative, or they facilitate an alternative finance option, different to the traditional mortgage bond, which assists those clients to achieve potentially a higher loan to value ratio. So to minimize the deposit requirements for individuals like self-employed people and non-residents. So they're certainly bridging a gap in the market when it comes to alternative ways to finance.
Awesome.
Okay,
Great stuff. That's
to
good.
the markets, and they're doing very interesting things.
That's interesting.
Okay. Awesome. We've got some questions here. I think let's just get into the questions quickly. So we've got a question from Wilhelm, and his question is, will buyers have the option to fix their rate throughout the loan term? So I think he must have maybe missed your comment around that. So if you can maybe just respond to that, Natasha.
Thanks, Willem. So the traditional way the banks look at interest rates is once the bond is registered, the client can request quotations on fixed interest rates. As I said earlier, those fixed interest rates will not apply to the full 20-year home loan term, but in most cases between 12 and 24 months. At some banks up to 3 years maximum term, and then it will revert back to variable. The client can keep on requesting quotes as the fixed rate expires, but certainly upfront it can't apply to the entire term.
Awesome. Thanks for that. And then we've got another question here. So we've got a question from Bongs, and the question is, does Uber deal with refinancing and re-advancing? Or is this, I'm not too sure, I think you made a little bit of a typo error there. It says, or this, that with the bank direct. So I'm not too sure what he means by second. Bongs, if you're still online, please just clarify the second half of your question there. But the first half, does Uber deal with refinancing and re-advancing?
So some of the contracts, some of our bank contracts will include things like further loans and re-advances, but some of the banks we work with, we can certainly assist with refinancing. So what we call, when it comes to refinancing, it's also known as a bond over bond-free property. So if you've purchased a property cash, it's unencumbered, we would use the title deed in lieu of an offer to purchase and be able to shop that unencumbered bond over bond free at up to 9 of those banks to make sure you're getting the best deal. Awesome. In terms of a further advance, so I assume Bong is referring to accessing the difference between equity and an outstanding balance on an existing bond. So we can certainly assist with that. If it is an access bond, that might be something that could be done internally via your internet banking, depending on the structure of the original deal. But if the property has incrementally increased in value against the original bond amount taken out, we can certainly assist with what is called a further loan to access that equity.
Okay, awesome.
Make contact and we'll have a look on a case-by-case basis.
Okay, thanks for that, Natasha. I think that that's a good response there.
Or ask, what's the link for the bond originator? Look, if you want to contact them, you can contact Spor. We'll put the email addresses in the comments afterwards.
Yes.
But you can on info@propertypick.co.za. You can send an email to that email address. There, do you have any more questions on your side, Candace?
No, I think that covers it. And also, I think we've got about 3 minutes just to wrap it up here. So once again, ladies and gentlemen, if you've got further questions, please do add your questions on the chat. You did that over the last few weeks as well, and we've responded to each and every one of your questions. So if you do have further questions, please do connect and share your questions. We will then get back to you on those questions. We will also, we've got some exciting news that we will be sharing with you soon with regards to Uber. Yes, we will probably have Natasha back with us in a couple of weeks again. So please do stay tuned, stay connected for the exciting news that will be coming. But yeah, Natasha, once again, thank you so much for joining us today. I really think you added a lot of value just by answering our questions as well as the questions that have been presented here today. So thank you so much. We do appreciate it, and we really look forward to having you, on our platform again in the future.
Thanks so much to both Leroy and Candace for having me, and for those who have tuned in. I think it's Winston Churchill that said, never waste a good crisis. So there's certainly opportunities if we look out for them, being cognizant of the fact that certain industries will obviously be negatively affected in terms of affordability. So I think it's a double-edged sword. A lot of people are struggling. A lot of people will have opportunities. And I think, as I mentioned, sentiment will drive the fundamentals. So I think if we can all, get behind the economy, bind together as South Africans and push forward. Please stay safe. Take care.
Awesome. Thank you so
Natasha.
much. Leroy,
Uh,
last words from you?
Yeah, guys, thanks for joining us. Let me just tell you who we're going to have on next week. So next week we'll be on same time, Wednesday at 1 o'clock. We'll be interviewing Maricia Robus. Now, she's from the Gauteng Property Inspectors. And what she'll be covering next week is she's a property inspector. We'll be talking about when looking at a property as an investor, what to look at. And when looking at a property as a first-time buyer, what do you look at? Look at damp, cracks, kitchens, how to see if the roof is right. So we'll be interviewing and asking her these questions so she can tell us as investors when looking at properties what to look at, and as first-time buyers what to look at. So we'll be on next week, same time. So it's going to be exciting. So join us next week, guys. We'll have Maricia Robus on.
Awesome. Thank you so much. Thanks, Leroy. Thanks, Natasha. And we'll catch up soon. Thank you.
Thanks, guys.
Bye, everyone. Keep well.